Good morning and welcome to the ADS Securities Markets Update with this short video today. The global equities saw a notable recovery yesterday and even today during the Asian session, as September's rate hike by the Federal Reserve estimates are fading gradually. The latest survey by Bloomberg showed that September's probability is basically below 30%, again back toward 28%, while December's probability right now has increased toward 59%. And moreover, the chief economist of the World Bank yesterday warned the Federal Reserve not to raise rates in September, as it may lead to a panic in the emerging markets. The U.S. equities also closed sharply higher yesterday with more than 2.3% of gains in each Dow Jones, S&P, and also Nasdaq. In Asia also, the stocks are also higher today, including 5.6% in Nikkei 225. In Japan, Shanghai also advanced by 1.6%, and finally the Hang Seng added more than 2.8%. Despite this recovery in the global equities, we believe that this is a short-term recovery, as the death cross formation remains on most of the global indices chart, which also suggests a deeper declines in the coming weeks. As for the fundamentals in Asia, there were also few economic releases from Australia, which showed in negative outcomes. However, the Aussie remained higher across the board. The Westpac consumer confidence or consumer sentiment declined by 5.6% in December after rising by 7.8% in August, which is also the biggest monthly decline since June, while the home loans also increased less than expected, rising by 0.3% in July after rising by 4.8% in June, while estimates were to rise by only 0.8%. Finally, in Japan, consumer confidence index also advanced more than expected, rising toward 41.7 in August, up from 40.3 in July, while again the estimates were to rise by 40.5%. As for the European session ahead, we will be watching many economic releases and further key economic releases from the UK, which is likely to have a notable impact on the market, and especially on the British pound and the British pound pairs also. Eyes will be on the manufacturing production, trade balance, and the industrial productions, and the estimates basically for today are mixed. The manufacturing and the industrial production are set to rise, while the trade balance deficit is expected to widen further back toward 9.5 billion British pound, up from 9.2 billion. Going forward, finally, to the US session today, we'll be watching only the Bank of Canada decision, in addition to the housing starts and the building permits also in Canada, but the Bank of Canada will be the key, which basically is likely to keep the current rate unchanged at 0.5%, despite the fact that the economy has slides back into recession. But we should not forget that inflation is higher for the past 3 to 4 months. However, a dovish tone by the bank is more likely. Finally, we'll look just quickly at the US dollar index, which basically closed yesterday well above its 100-day or at its 100-day moving average and rebounding above 96. However, the technical indicators also remains heavily overbought, which basically suggests that a current rally could be another short-term play or another short-term rally before the trend resumes on the downside. Our bearish outlook remains also the same and remains valid as long as the index stays below the 50-day moving average, which stands today at 96.60s. This is it for today in this short update. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic reports and analysis. Thank you for watching. I'll see you once again tomorrow.